What is up, ladies and gentlemen? Welcome to this week's edition of Tuesdays with Turbo. This week, we got a big show today. This is the one that I've been kind of teasing now for the last couple weeks. This is going to be a hot button issue for quite a few folks. But before we get into that, let me introduce myself. My name is Ryan Turbo Jackson. I am your insurance resource, and in videos like this one, we break down insurance language, insurance endorsements, policies, just so you know what you're better what you're buying. And if you have any questions, let me know. But yes, this is a hot button discussion here lately, and we've had some companies do this up until this point, but we've had our biggest company take the plunge as well. So I did want to get out ahead of this and kind of let everyone know what's going on and answer some questions. And today we're going to be talking about deductibles, and in particular, home insurance deductibles. So we're going to go down what is a deductible, what types of deductibles are available, and what is the big, I'm not going to say controversy, because foreshadowing into my video next week, we're going to be talking about how home insurance is not a maintenance policy. Your home policy is not a maintenance policy. And like I said, I don't want to clutter this video with that content, but just to kind of let you guys and gals know that is going to be next week's show. So let's get started on deductibles themselves. What are they? So let's get a common definition here so we can all be on the same page. And this is a very broad description of a deductible, and it's the amount of money you have to pay out of your own pocket before your insurance kicks in and covers the rest. And like I said, this could be a home deductible, an auto deductible, and your health insurance deductible. It's the amount you pay out of pocket before the insurance takes over, like the description says. So let's look at some examples just to kind of lay the groundwork here, just so everyone knows. Let's take our most recent, which is why there wasn't a video last week. We were busy with claims. But let's take last week's storm, for instance. An example, knock on wood, God forbid this happens to you, but it does happen. Tree falls on your deck. It's, you have the contractor come out. It's going to be $10,000 to replace and or repair your deck. On your home policy, you have a $1,000 deductible. So the insurance company pays $9,000, you pay $1,000. So kind of cut and dry here. But like the example states, it's you pay your deductible and then everything else the insurance company pays for. So what does this mean as far as the amount of your deductible? Well, that's where it gets kind of tricky. And like we talked about with the auto insurance, and the easiest way to kind of think of this is the lower your deductible, the higher your premium is going to be, because you're paying less out of pocket up front, and then the insurance company pays more. Excuse me, I've told this story many times on the channel, but one of my very first sales trainers said that when it comes to insurance, you pay twice. You pay your premium, and then you pay your deductible when something happens. And as part of my job as your agent or as an agent is to sit down and talk about, okay, what are you comfortable paying, not only your premium wise, but when it comes to your deductible, because that is kind of a weird situation to be in, because we think, especially with the cost of insurance going up everywhere, we are seeing a lot of folks inquiring on raising their deductibles, and just so the premium can be more affordable. So that is something. And then there's people on the complete other side that have extremely low deductibles, and they want them there because they don't want to have to pay a lot out of pocket. So there's not a right or wrong answer as to what, should you have a higher deductible, should you have a lower deductible. It is all about your comfort level, your obviously dollars and cents, and if you are able to come up with the said deductible once something happens. But there are different types of deductibles, so let's talk about that as well. Most of us are used to just a flat deductible. The example here is $1,000 all peril. meaning whatever happens to your home, and we're talking about, for the sake of this argument, we're talking merely about home insurance deductibles. So flat deductible, $1,000, no matter if it's weather related, fire related, water related, vandalism, theft, doesn't matter. A flat deductible, like it says, $1,000, all peril. And then there's the complete other side of the coin where they take, it says coverage A here, but coverage A is how much your dwelling is insured for. So like the example here says, it's a percentage deductible. So if you have coverage A, or how much coverage you have on the dwelling itself is $300,000, you're going to have a deductible of $3,000. Seems kind of simple. And the reason, and before we get into the mixed here, one of the reasons that companies do a percentage deductible is it keeps the premium a little bit more stable. Whereas some companies where you have a fixed deductible, and as we know, year after year, the dwelling coverage does go up because the cost of labor as well as the cost of materials tends to go up. So even though that deductible is staying firm at $1,000, the risk is getting more and more and more and more expensive. So if you take the percentage deductible, that as the risk and the amount of the dwelling goes up, that deductible goes up with it. So your premiums tend to stay a little bit more stable. That's the reason some companies do that. And then there's some that have a mix. They'll have $1,000 deductible, and then a percentage or an increased amount for wind and hail. So any of the losses that occurred last weekend, those would be wind and hail because they were caused by wind and or hail. And we see this a lot with roofs. You'll have $1,000 deductible on fire, water, vandalism, theft, everything except a claim that arises from wind and hail. So we see this a lot with roofs, siding, windows, things of that nature, where you'll have an increased deductible there just because the vast majority of premiums do come from weather-related incidents. So $1,000 for everything else, and then a percentage deductible, or even like $1,000 fixed, $1,500 wind and hail. So it's kind of it's a mixed bag because it is a mixed deductible. So again, getting back to which one's the best one, it's all up to how much you can afford. I was dealing with a client a few years ago where he had a rental property situation, and he didn't really realize he had a percentage deductible until there was a claim, and realized he had a 3% deductible, and the dwelling coverage was well over $250,000. So he was sitting there with almost a $7,500 deductible and didn't realize it. So, but on the other hand, if that's something you can come out of pocket with, by all means. And there's some things too. I did have some notes here. When it comes to choosing the right deductible, you want to take into account how often you file a claim. And especially when it comes to home insurance, there are people that will go their entire lives without making a claim on their home insurance. And there might be people that just by the sheer fact of where their house is and bad luck, have 3 over a 5-year span. So unlike your auto insurance, where you kind of have a little bit of control over how often, or there's people that go their entire lives without auto claims either. But it's harder. You have less control over what happens when it comes to your home insurance as compared to your auto insurance. So then do you have emergency savings? If you can comfortably afford a $500 to $1,000 surprise bill, a higher deductible might work. And again, would you rather pay more now or later? Getting back to that, you pay twice. You pay your premiums and then you pay your deductibles when something happens. So it's kind of I'm not going to say a juggling act, but it's definitely something that is very unique to you and your situation. So kind of keep that in mind. kind of keep that in mind. Well, the reason that I wanted to put together this video in particular is because now all the companies we work with, when it comes to new business, are starting out at $1,000 home deductibles. Now, this may not seem like breaking news to everyone, but because the vast majority of the companies I've worked with my entire career have started out at $1,000. There were a couple outliers that did still offer a $500 deductible, but for the most part, let's just say 99% of companies out there started out at $1,000 deductible. And we saw a couple of our companies earlier, it would have been mid last year, where, let me back up. Prior to that, most companies that did have lower deductible options, they just kind of grandfathered those policies in. So you can always tell how old a policy is by how low the deductible is. And even some of the policies here at Abbott and Powers, I've seen one that has a $100 deductible. So as you can imagine, that policy has been on the books for quite some time. And we do still have a lot of policies that have a $250 deductible. So again, been on the books for quite a while, because that option, when it comes to writing new business, has not been available at least for 10 years. I'll put it that way. When I first started working at an agency that worked with auto owners, the minimum deductible was $1,000. So even to see $500 deductibles, that policy's been in place for quite a while. So moving forward, like I said, the reason they're increasing these deductibles is A, to keep things more cost effective for you, the client, and B, to kind of get away from the mentality of, again, that your home insurance is not a maintenance policy, and it's meant for more expensive happenings, more expensive occurrences. I'm not going to say catastrophic, because there are legitimate claims that need to be paid out that are not catastrophic. So please don't take it that way. And again, we're going to get into that a whole lot more next week. But the main reason that I wanted to bring this to kind of the forefront is Auto Owners has put out a bulletin to the agency here that as of September 6th, there will be no more $500, there will be no $250, there will be no $100 deductibles on the books. And it's not just our agency, it's company-wide. As of 9/6, if your dwelling coverage or how much they're covering the home is from, it says 0 to 500,000. I don't know of too many homes that are, $100. But up to $500,000 worth of coverage is going to be moved up to $1,000 deductible. From $5,001 up to $1 million is going to raise it to $1,500. And for a $1 million replacement cost and up, they're going up to $2,500. And again, as I've noted here, there will be mixed deductibles available. So again, if you wanted to kind of offset some of the premium, we can mess with wind and hail deductibles if you wanted to. But I did want to get out in front of this because it's April 8th. These changes will not be made until September. So what happens to the policies that renew, say, tomorrow? Well, you're going to renew with your $500 or $250 deductible, and then when it renews again next year, you're going to see that increased deductible. Auto Owners has told us that we as an agency are going to reach out to those that do have those lower deductibles to kind of let them know what's coming down the pike. But what we're seeing is that when we're having interactions with our clientele that are going to be affected by this next year, you might think about this as oh man, this sucks. This really sucks. I've had this policy in place since 1985, and I've had a $500 deductible. This is terrible. I agree. It is definitely going to be a change in how people view claims and their home policy. But my thing is if they're going to implement this next year already, let's take advantage of that and get you your savings for this term as well. I mean, to me, it's just kind of common sense. Let's rip the Band-Aid off and do it now. And I've also been talking to a lot of our clients, even if I do rewrite or look at rewriting your current auto owner's policy with one of our other companies, the minimum deductible for that is going to be $1,000 as well. The only difference is that when you go into these other tiers, like the $1,500 tier, the $2,500 tier, most of our other companies will still allow $1,000 deductible, even with those, even with that level of dwelling coverage. So there is that, but it's one of those things where if you're used to a $500 deductible, bumping it up to $1,000 is not the end of the world. Again, there might be a claim or two where you're going to have to come up with it out of pocket rather than claiming it on your policy. But here's the kicker, is that if you haven't made a claim in a while and you are taking advantage of the claims-free discount and you make a very small claim, a lot of times it's cheaper and it's less expensive in the long run to just pay that out of pocket instead of losing your claims-free discount for the next 3 years. So again, I'm kind of putting the cart before the horse because we're going to be talking about that next week. But this is just something that I wanted to get out in front of. Let not only our clientele, but any auto owners clientele in particular. And we've had this happen with Pioneer now. Like I said, Pioneer was last year. Fremont just came out and did it, and now Auto Owners is going to be doing this in September, and then anything that renews from September 6th on is going to have that at least $1,000 deductible. So, like I said, I want to get out in front of this first. Be very frank and very foremost about it, but instead of thinking about it as oh man, this is terrible, it's like, oh man, let's take advantage of this, increasing the deductible, get a little bit of discount while we can on this term instead of waiting until next year and having it increase then. And I have a very good feeling that even though if they do send out a letter and we send out a letter, there's going to be a lot of folks that just don't open them or happen to forget until it's claim time. So again, this is one of those, I want to be completely open, completely forefront with this, and this is taking into account what just happened last weekend, and then last week with all of the claims that we dealt with, and now this week getting to reset and kind of taking a step back and looking at everything kind of from a mile high view. This was the perfect opportunity to do this video, and then the timing of everything, with auto owners coming through and telling us this a couple weeks ago. So I figured, what the heck not? Let's just rip the Band-Aid off, let it be known, because again, it's not a secret that this is happening, but it's something that I think a lot of people should be thinking about prior to their renewal, and this is going to give you the opportunity to do that. Auto owners is not, and none of our companies are going to a mandatory percentage deductible. State Farm likes to do this a lot, and it kind of blindsides folks a lot because when they started the policy, let's say 6-7 years ago, your deductible was at a certain point, and especially now with the cost of labor and materials increasing the way it is, dwelling coverages are increasing faster than we've seen before, and those deductibles are raising too. So if you're, and State Farm isn't the only one, but if you do have a percentage deductible and you're not beefing up your savings to help pay that deductible in case something happens, you're going to be stuck behind an 8 ball having a very large bill, and that's something I do not want you to do. I don't want you to do. I honestly, as an agent, want the claims process to be as quick and easy, and just as it's never a good experience, but be the best experience that it can. So that's going to be it for this week, ladies and gentlemen. Like I said, next week we're going to get into some more homeowner stuff when it comes to claims and everything like that. So stay tuned. I cannot wait for that one. And as always, everyone have a great week, and I will see you again next week.